And now your show hosts, Room Camera and Dan Gibby.
Welcome, everybody. Welcome back. For those of you that join us every Wednesday, I think this is going to be enlightening, illuminating, and the goal is to remove your trading illusions, which there are many out there that are providing stumbling blocks for every trader that comes to the markets. And it's one of the main reasons, besides a lack of the initiation of money management principles, which we can talk about a little. But it's one of the main reasons why the majorities find it so difficult to succeed. There are too many illusions put in front of their eyes. And we had a discussion in the green room in part, I think it was possibly last week, I don't know if it was this week, about we were talking kind of philosophically about things in life that we are exposed to that create thoughts and beliefs. Could be a book you read, could be a website, and so on. And some of these things are actually diabolical because they are meant to be evil. And in a somewhat jokingly way, I said, did those that began to create different instruments to help us make decisions, did they have some diabolical points of view to allure traders into trading the markets with certain tools that would lead them to failure? Why? Because those that in the know need those that can, on a consistent basis, to feed them, meaning with money. So with that being said, keep an open mind to what Dan and I are going to share. And I think you'll have an excellent experience today.
All right. Yeah, that was a great talk the other day. So let's get into it. But just in a different kind of nutshell, we use the term objective versus subjective. Objective, every thing on this sheet, which is our technical approach, involves combining these concepts that make up the method. So objective is a candlestick, is a combination of candlesticks, is a pattern, is a trend, higher highs, higher lows. Those are objective. They're existing in fact. And what we're going to be talking about today is these people who try to overlay subjective mirage things to as an attempt to not to speed up, but as an attempt to replace actually what's objective. And so we're going to explain why that's a ridiculous thing. Why do you want to rely on a derivative of reality, objective price action? So we're pattern-based traders. That's where we start. Compelling setup. And then we say, okay, we add these other concepts. Where is that setup in the trend? We use multiple time frame analysis. Is that set up on support or resistance? Is it showing relative strength or weakness? Now, granted, there's our interpretation of these, because otherwise we just put it in a black box. But that's the seasoning component of, Greg and I pull up a chart and we instantaneously say that's a no-brainer. It's our seasoning combining all these concepts. We'll show you volume and moving averages. We'll show you how to objectively use moving averages today. And hey, we got a beautiful setup. What are the broader markets doing? What are the internals doing? And as Greg highlights appropriately all the time, position and money management, trader psychology is key. He says you should start there before you put on trading actually. So this is a great comic one of our subscribers sent us. So learn the secret oscillator settings. Look at all these people lined up. Learn how to manage risk. So, Greg, you I'm sure could talk an hour on this cartoon right here.
Well, I mean, it's what I wrote about over the weekend in that letter that I sent to the the whole database. Let's see if I can find it to share it. But
Uh,
yeah, I mean, it wasn't so much about the left side of there, but all about the right side. And the right side depicts that what I wrote about, that so few really want to learn it initially about position and money management.
Yeah, or objective price action. They're, the term secret is embedded in human psychology and marketing. So just think of other industries of analogies of false advertising. Losing weight is a perfect one. Would you rather be this guy going to the gym and having a healthy diet, or would you rather take a pill and do whatever you want? So it's perfect analogy. So our method, this is kind of as a one sentence of the prior, compelling setups, multiple time frame alignment, and those other concepts. Now, Greg came up with this term techno fundamental, which is okay, we're ready to hit the button on this. What are the broader markets doing? What are the market internals doing? Are we at extremes to make the setup less likely of working out? Intermarket analysis, looking at the relationships of sectors, interest rates, commodities, and that's just another component of not only helping us look for opportunity, but knowing whether our setup in that industry is going to succeed. Some people say technical analysis doesn't work, it's a coin flip. Well, we've been at this 30 years and we have 85% plus success rate in applying our approach. So something is statistically significant if it's 50.1%. So that just, those are just non-believers. Now I wanted to start with this because this is an actual email exchange that Craig had with a subscriber, and it's a great intro to today's session, and maybe some of you have been there also. So I just highlighted a couple of these that we can talk about. I want to sell options. Fine, that's one of our strategies that we teach. But I want to use Bollinger Bands, linear regression channel, MACD, Heikin-Ashi, stochastic OBV, and I can't even pronounce it, Chaikin money flow. Aha, but I have not been successful. Greg always makes fun of this. People who start Greg's been preaching this for 30 years, or maybe 20 something, because, I don't know what year, Greg, you threw these in the garbage. But Greg says this exact same thing. You're not successful. And so I start tweaking the buttons under the hood, because these people who wanted to sell you a bag of tricks here of the magic sauce, the cartoon of the secret, then you say, oh, well, I must have done something wrong. You can read this. I'm not going to read it to you, but I want to get to be able to read the market. I want a mentor that's, going to help me do this, manage risk. Uh, Greg, are you frozen or am I frozen? Greg, I don't hear you.
That this is someone advocating on there, and I don't really, and you'll start seeing things more clearly.
Yeah, Greg, your internet was blipping in and out unless it's me for some reason.
Yeah, I just opened up something that I guess was taxing it.
All right, so environments using indicators become mind numbing. So this is Greg's response. Hi, Tatya. It's all based on price action, which was our first slide, which is our starting point, price action. Those trading options without an understanding of price action is crazy. This is still Greg talking. You're still caught up in finding a secret in the markets, the cartoon. Things that are complex that you think equal success, which is the first line of, hey, I'm combining these 12 oscillator approaches. Anything other than focusing directly on what moves them, price action, is a derivative and misleading. Price patterns display what others are doing. So that's a great intro of what we're talking about today. So why do we use technical analysis? Well, because let's jump to the third one here. It's taking all market participants everywhere in the world trading that instrument. It's taking all the time in sales, all the prints, and on whatever time frame you're looking at, it's painting a picture of the true collective beliefs of all market participants and why we say charts don't lie. And what we mean by that is that's objective. That's what's happening. People can get on the news and start blabbing about whatever they want because they're either wanting hopeful notoriety or they have self-interest. This is Greg's quote I grabbed many years ago. Patterns are a picture of psychology in motion, fueled by money. So just a kind of a different way of saying this third one. So our approach applies to anything that moves. A bag of rocks. You show me a 15-minute chart of a bag of rocks being traded down at the port, and I can tell you the supply-demand relationship of those sales. All right, so Greg, so there's our background. So how do we what do I do to make this successful, our approach?
Well, we'll go back to the previous slide. The first step is to let that salivate in your brain, because it leads you to what technical analysis is about and looking at charts. It's not about dark cloud covers and haramis or whatever you want to call them. It's about understanding that it's a reflection of what other people think that has been produced with money. And from there, we can go to the next slide. So now we get our head wrapped around that, what technical analysis is about. Well, where do I go from there? I have to develop a method of telling myself what to think. Because as I look at the chart produces thoughts in the time frame that I'm using. And if I put, like that individual did that wrote to us, 10 different indicators and lines and so on, think about each one of those things produces a thought. And if you're utilizing those things, of course, you're making an attempt to have subjective information reach a point where they are creating thoughts in alignment. And then do those thoughts, will you accept those thoughts? No matter what you're using, when you look at the chart, will you accept those thoughts? Okay. Now, if you make it so complicated with these esoteric things, it becomes extremely hard. But let's say you begin to embrace MTS, and you're saying, I understand that, the simplicity of it, where it's leading me to think, and so on. So now you, like with any profession, you have to begin to utilize that information, that method. And so utilizing that and gaining experience, you'll begin to build confidence if you can follow the method. Now, markets are a very different animal than other professions because we all want to feel secure. Right? There's a lot of this psychology here. I need to feel secure in everything that I do. And I don't want to make mistakes, right? Mom said, think about what you're doing. Don't make mistakes. Study this, blah, blah, blah. And so now you get conflicted because sometimes the markets are very erratic. So there's a learning curve about different market environments. There's a lot to learn, just like anything else. You go and to become a lawyer, a doctor, or whatever, a certified auto mechanic, you have a few years of learning and then the experience. So over time, you begin to gain confidence in what works, what doesn't work. At times, markets are erratic, and I need to just what we call sit on our hands. There are times I need to be patient because if I don't, I'm just going to potentially do mirage trades. And of course, I need the discipline to do all of that. How do I do it? Well, I can only explain to you how I did it. It was to remove or reduce all of that misleading information. I had to produce a systematic method. Systematic meaning I'm doing the same thing every single time. And the reason why we refer to it as factory work. Nobody really likes to do factory work because it's monotonous. But trading is not monotonous because you know that there's going to be a reward if you do the work. It's not just factory work. In reality is you do the same thing day in and day out. Nothing changes and you're just a robot. We're not robots. And so I coined this. We need a thought process. I need a method that guides my thinking on a day-to-day basis. Otherwise, my thinking will be random, right? So no, and trading is like other things in life. You cannot, I'll use the analogy. You cannot drive your car and one day red means go and green means stop. And that's how people look at indicators. Depending on the settings or with the day-to-day, do I go? Do I not? Do I stand? What do I do? And so coming together, we develop this system, this method, and we learn to gain the patience and discipline. There is an oscillator, and that's why it says, is it overbought? Is it oversold? These are subjective terms. They're meaningless terms. Why are they meaningless? Why do so many people use them? They don't know what else to do. This is what they were told to do by someone else. And so here, this is highlighted, the settings. How the hell do you know those settings are right? Because someone else told you to use them, because that's what came on the platform. And then you go to a webinar and somebody says, oh, we can tweak this so that this could be a little slower and the trigger may be a little faster and it'll optimize this thing and it'll show you some examples of how it worked and so on. And so does oversold or overbought, do those terms mean you should short or buy? No. It's just you put the subjective squiggly line on your chart. It's guiding you as to what you should think. And common sense says to you, hey, if I change these settings, it becomes completely different. If I look at another stock, it doesn't work at all. And then at some point, you either accept that it doesn't work or you just continue the mouse wheel, or it's called. You just continue to rotate and thinking that you're going to find the right combination of settings and indicators one day.
Yeah, and I like to summarize this problem also of they give you incorrect information that price action tells you. Like, for example, I would love to see what happened to this particular stock. It's telling you it's overbought, but this is a breakout with a little, 1, 2, 3 continuation over the high of this red bar. I would say it's going 154, 155, but we'll show you other examples. So yeah, I love this graphic here of the rabbit hole. So this is what somebody's trying to sell you as the Holy Grail. So number one, it clouds my interpretation of objective price action. And number two, I don't know how to read this thing, but it's gonna give you incorrect information that
It's confusing. At times it could be correct, Dan. I mean, I've seen it where,
works.
prices turn in the cloud, right? It's called an Ichikumi cloud. And other times it's covering the prices and just like anything, whether you put fib lines or trend lines or anything like that on there, you're going to have a point in time where prices just rip through that like it's not even there. And of course, you're going to be like, what the hell? My cloud's been broke. And why did that happen? I must have the wrong settings. I didn't follow the instructions. Maybe I need to take another class. Maybe I need to buy a proprietary one.
All right, the
Going
super
around. All of a sudden, you need therapy.
Do you trust this guy?
He looks trustworthy.
Yeah. He's trying to, sell you this cloud thing, whatever. But there's
Those are
nothing
bands,
that,
and who knows what it is, but
right.
it's just another indicator that someone is selling that's, proprietary, and the word proprietary makes it more expensive.
And, back to the pill, the diet pill.
Yeah.
So, yeah,
So
so
that was a big one too, connecting the dots, trend lines. And when you think about this, and you don't think about it initially because you've been told this is how you should do it, and you see people on TV connecting dots and drawing lines, and at some point in time you're going to be like, but it broke the line and then it kept going up. How is that possible? Or it broke the line and then it went back up through the line. And the idea of, think about this. If I came to you and I said, if you connect these dots and you project this line into the future, it is going to show you mysteriously that where support and resistance is going to be. And think, well, how's it going to do that? Well, I think, Dan, if this is where this came from, if I may remember right. It was something about a bombardier, like in maybe World War II or one or two. They would connect dots, and those dots would project where that bomb was going to land. And
oh,
that's where trend lines came from.
I didn't know that story, but
Yeah.
physics is real. That's objective.
Yeah.
That's
But as it relates to this,
right.
you just start seeing over and over again where it doesn't work, just like fibs don't work, or clouds don't work, or uh, whatever that stuff, Elliott waves, and it just gets deeper and deeper down the rabbit hole.
You know,
So let's show them some stuff they can use.
yeah. So yeah, first of all, this is our live trading room. We start at 9 a.m. It's a fabulous place. We give you an entire week trial, $7. It's watching us do our trade, so to speak, in real time. We're scanning, answering questions, trading, looking at managing opens, and we're doing everything in real time. So it's a great place to
Ah,
get to know us.
oh, that's not the right link. That's the right link that I posted there. Trying to find that article I wrote. Well, go ahead, Dan.
Yeah, so we're going to show you briefly here how to objectively use moving averages, because you might, and back to our first slide, we say volume and moving averages are secondary to us. We don't need them. We need price action, and that's it. but we throw on a couple moving averages and volume just to speed up the analysis. So that's what we're going to show you here.
Let me ask there's a question here.
Sure.
In the initial slide, trend and bias of broader market is mentioned as part of the thought process. My doubt is what if the markets are up, but sector isn't? Does it matter or not? Well, that's good information, Ramit. If what you're explaining there is a sector and market showing either relative strength or weakness. So when we look at, let's just say technology is up and you want to look at inside technology and you say, well, semiconductors, that chart is moving higher at a faster rate than technology. And you say, well, that's a stronger sector where technology ETF would be more diverse. Something in there is underperforming. Or, the S&Ps are going up, but XLE oil is going down. Oil is weak. And so, again, you can apply that to anything. It's about relative strength and weakness, which was on that slide.
So the subjective people, just like the trend line that Greg talked about, think that prices magically coming to a moving average is objective support or resistance. And that's incorrect. Objective support and resistance is our pivot analysis. Is it a major pivot or minor pivot? Look to the left, and that's objective. Now it could become what we say objective, meaning if enough, remember we said the technical analysis is the sum total of all market participants. Well, big money, mutual funds and so forth, widely do follow the 50 and 200, for example. So that's why we look at them too. But they're nothing but a squiggly line without them being confirmed with objective information. And that's what we'll show you. For the subjective people think moving average crossovers, this magical turning or the 50 and 200 or any other combination that they'll try to peddle to you is a buy or sell signal. Now remember, a moving average, whatever number it is just taking the closing price and dividing by X. How on earth is that objective support or resistance? And so they're late by definition. So to say, oh, this 20 crossing the 50 or 50 crossing the 200 is a buy signal is not only just a ridiculous proposition, but many times it's the absolute worst time to get in. So it's another one of these misnomers of the subjective oscillator people. So on a daily chart, this one's daily. We use the 20, the blue, 50 green, and 200 is the red. And we can just quickly, we're trading price. So remember, I can take these things off, but short, intermediate, and long term tells me, I have a chart here in a second, where I can take the candlesticks off, but you have to intelligently be able to say, okay, well, here are the different trends, and now put the candlesticks on and let me look at them. On our weekly chart, we just look at the 20 period moving average. And if you do the math, that's a 100 period moving average on the daily chart. So if I'm looking at a weekly chart and I see a rising 20, I know I got a rising 100 on the daily. So that's using multiple time frames, moving averages, and because remember, multiple time frame alignment is one of our concepts. We want the bias to be in alignment with the time frame that we are trading. So here,
looking at one time frame, right, which was
right,
the purpose of that.
Right. All right, so here's just an example of now moving averages and crossovers, they're late, whipsaw, there's no entry. So all these are telling me is I have a short to intermediate term downtrend. Okay, so now it's flattened out. So the downtrend is breaking, but remember, we're trading price action. Which moving averages, here was a fantastic entry right here using candlesticks with our moving averages. But what mystical combination of moving averages do you see providing a buy or sell setup here? None.
It's not about crossovers, Kim. And the takeaway here is to recognize trends in multiple time frames. That's the use of the moving averages. When it showed this 50 MA, 50 is equal to the 10 on the weekly. Right? So we have a 20 above the 50. 20 was rising here and dropped, right? It moves up and down. It's a faster moving average. But the 50 is still rising. So the weekly trend is still bullish, rising. So which leads you to thinking pullback should be buyable. Now, buyable where? Well, they say look to the left. Where's their support? And so it's not about the crossovers, right? It says those are late. And then you might say, well, I need faster moving averages. I need to use exponential ones. And maybe instead of a 20, I'll use an 8. And all these different combinations that you get into that makes you crazy. Whipsaws, late signals, different questions, which leads to you thinking there's something wrong with you because everybody's talking about using these crossovers and moving averages and And so basically, you just want to understand why we're using these moving averages. There's nothing proprietary. There's nothing that makes them special. They're what the majority of people use and institutions use in a simple format on stocks and indices. And it's about multiple time frames, period.
And so if I took off the moving averages, this is a very, very messy chart. And if we were in the green room or here, and I asked somebody using our technical approach, find me the best setup on here, in your opinion. This would have been a 1, 2, 3 that didn't trigger, but here would be the best setup, right here. A gap down, bottoming tail, range expansion, closing breakout over the high of that bar. So now take that same pattern right there and put on the moving averages and add everything Greg just said about it. So I don't need the moving averages, but these moving averages right here support. That's why we said we're using them subjectively intelligently. Here's another example. So I purposely took off the candlesticks. In the next slide, we'll put them back on. So remember, short, intermediate, long term. Can you picture the trends on multiple time frames? Yeah, I have a longer term flat, and I have rising 20 above rising 50. It went flat in an intermediate term uptrend. It tried to break out. Cross doesn't mean anything to me without looking at the data. And then the angle and velocity of this. Now see over time, remember, because they're delayed, and this is taking 20 bars and knocking off the last one and adding the first one, whereas this bar is going 50 back and knocking one off. So that's why they're slower moving. And we've been doing these MT lives for over 6.5 years, whatever it is. And we've had, obviously, on almost every subject I can think of, intelligently using moving averages. So this is telling me this thing's been tanking. And now it's slowing down, crossover. I have no idea if that's meaningful or not. We still got a flat 200, had a short-term rally. When is it extended? When is momentum stalling? When the turns are beginning and confirmed? So just a couple questions. Do these help? Now, let's look at the candlesticks. So remember up here, we have a flat, the 20 broke down. So this one, the moving average crossover, it's just coincidentally did confirm. We had a bearish gap here, continuation bar, and I can't see to the left, but I'm assuming there's a price void, which is one of our concepts, which means look to the left and there's insignificant support. So here, when did it get extended? This is the farthest from the 20 MA. And that doesn't mean anything other than it's down a lot. But we trade price. This is one of our patterns called a bull 180 reversal. Still not actionable because there's no pattern. And so I'm purposely talking about these other concepts because remember slide 1, the combination of those concepts and a pattern is what we trade. So this greater than 100% retracement, bobbling around, higher low, breakout, that's allowing the 20 MA to flatten out. This gap up, now you have my attention to look for bullish setups because I have this big price void to the left. Kept moving up here, bullish time consolidation, breakout failure. Look, this rallied all the way back up to here. So that's another one of our concepts, retracement. But because of this big move up, it has a price void to start trading on the way back down. We're traders, right? We'll trade it up. We'll trade it down here. We'll trade it up here. And we'll trade it down, provided we get a pattern. So came down a lot, tried to stabilize on support, 20 MA flattening out, 50 flattening out. So if I were to take off go back to the other slide, and these are going, now I have all 3 moving averages going sideways. I don't know which way it's going to break. I have no idea. But now let's apply this pattern. We have bearish price action, declining 20 MA, wide range closing breakdown, inside bar. This is what we call a bearish 1, 2, 3 continuation. And it's at all these converging moving averages. It's under them all. And I have a price void. We found this with what is our scanning software, TC2000, which we're going to switch over here momentarily. And that's where I found this thing, JHG, right here. And then we use our technical approach to say, do I have a tradable setup right now? And the answer was absolutely yes. Short under the low. We gave it to subscribers. Anything to add? I've been talking a lot.
I could add a lot to it, but we'd be here until 2 o'clock. There's concepts here about why there was trading opportunities when the moving averages were far apart. Then there's a trading opportunity with the moving averages close together. What does that mean? How do you utilize that? So I kept my mouth shut because we can keep talking about a lot more stuff.
Yeah. Well, and that's our moving average MT live. But no, we've covered a lot here. Yeah, so we're actually ready to look at real charts here. So this is Greg's advanced gap trading course. We offered it last week, and today's the last day for that. He's never offered this before. He has a 7-step process to objectively trading gaps, which is one of our favorite day trading strategies. But then if it's a swing setup, you put it on using the gap strategies and then set your stop if it's a swing and then head on to the golf course.
It also explains how to utilize intraday charts in the afternoon, because it's not only about gaps in the morning. Like Dan said, those gaps can be used for, in the later part of the day, depending on how they end up, for swing trading opportunities, as well as, the initial focus is day trading in the morning and also in the afternoon. So some people like to just trade mornings. Some people want to trade afternoons. Some people want to trade both, and the course covers that.
Got a couple of alarms here. All right, so if you use this code at checkout, Greg's never done this in the whole time we've been together, 50% off of that. And then in the during the checkout, these are some goodies that you can add. The advanced management strategies. Remember our cartoon? This is Greg's course on the right. Advanced management strategies. That's a
So, Dan, hold on a second. You grabbed that, I guess, from the GAP course. So the GAP course, you can purchase the GAP course with that code, 50% off. However, that article that I wrote, so this was another conversation in the green room when we had conversations about many things, but it was about how so few people are interested in money management, and it motivated me to write the article that I just shared with you, which leads you to the money management course, not for $498, $247. And they said, if you offer that, Greg, I'll buy it. And I said, and that the title of the article was about leading the horse to water, but can you make him drink? And so the motivation was, this is so inexpensive that if you don't drink the water, your trading account is going to die a slow death or maybe a quick death. So it's a one-time offer that was there this week.
all right, yeah, you told me to scan down, and that's what I saw. So these are the goodie add-ons that Greg came up with. He thinks it's Christmas in July, I guess. So in the AMS add-on, I love trading options, both selling them and buying them. So this is selling options around the patterns. That's an add-on, 50% off. 2 months of the green room. I showed you the link for our live trading room.
That
Great.
shows. Yeah, let's move over to charts, because they can read that if they have questions, they can ask. But
Yeah.
that link has all the specials. You can just purchase the money management course for the 247 if you want to add those specials on there, which they're going to be gone tomorrow. And
It sounds good.
yeah, because it's a incredible offer, and those in the green room convinced me to do something exceptional, and I did. So yeah, let's look at the charts. We got 15 minutes and cover what we were talking about here. And just let me pick something we can look at different time frames or intraday time frames together. Okay. Okay. Usage of a 65-minute chart instead of an hourly chart in the video that I've been showing. Nothing special other than to recognize that a 65-minute chart breaks the candles up into equal increments of 65 minutes. 60-minute chart, either the first bar or the last bar is going to be 30 minutes. And depending on the platform that you use, so there isn't consistency as to knowing, hey, if everybody had the first bar as the first 30-minute bar, that'd probably be good, because a lot of times we do trades above, the high or low of the first 30 minutes. But you could be looking at your chart and your first bar is an hour and mine's a half hour, and it's confusing. So I switched over to 65. Right? Yeah. Into day trading hours. Right, right. Whatever. In hours. I'm not utilizing the 65-minute chart, but you could. I'm not utilizing it for making trading decisions. I'm using it for the macro trend intraday and support and resistance. All right. FLR. That's a beautiful chart. Beautiful daily chart.
Yeah, I love it. But earnings ate too. But yeah, I love the daily.
And so here's the earnings date up here. It shows you the industry. This is how, you can set these up any way you like, but this is how I set it up with the earnings date. So here's the gap, what industry it's in, the subsector. So, and then from there, say you like this chart. You can say, okay, I can then click this and open up that box and shows me all the stocks that are in there. And within these minders, I've inserted different things that I might want to see, like does it have a wide range bar? So here, floor is marked with a check mark that it has a wide range bar. This one has a wide range bar, but it's a different pattern. There's another wide range bar. This one looks good, like it should be able to continue to move higher. So the scans put us in the ballpark. This is just wide range bars. There's another decent look. It went down and it went up and it's consolidating. Looks like it should be able to go up. So we don't have any affiliation with this company, but I've been using this for decades and created multiple layouts that I share with members, subscribers, and students that enable them to find what they learn and what they're looking for. Let's see, what else? So again, we apply this to anything we're looking at, we're trading. So as you bring that up, and we talked about moving averages, 20's rising, the 50's rising, the 200 is declining, which tells me that longer term, this has gone through an extensive correction and it's rebuilding. It's in a rebuilding mode. You can see the weekly chart. It was up at resistance, and it's got a big trading range, but it's beginning to create a launching pad, which is just not ready for prime time yet. You don't like getting into earnings, trades at earnings. I personally do not. I don't want that risk of the uncertainty of something that might gap down significantly or gap up significantly. It's like, do you want to trade, at 2 o'clock when the Fed news is coming out? Do I go long? Do I go short? What's going to come out of there? We assume they're not going to do anything, but what if some surprise comes out and then now you're in a trade and you're like, you're either going to be like, yeah, that one worked out, or you're going to be like, how do I explain that to my wife? It could be, so you're gambling, but Dan does earnings trades with options.
Mhm.
And that's a different animal. I'm primarily looking at things directionally. Is it going to go up or down? If it's going sideways, it's good for credit spreads. All right, let's take a look at something else. No one has.
Greg, look at, just since you're on Tesla, look at that beautiful wide range breakout at the flat 20 and 50. We gave a directional to subscribers then.
Yeah, right.
Beautiful.
I mean, not that I wish we held on to it longer, but I gave this to subscribers on this day, right
Mhm.
before the close.
Yeah.
And I posted it on StockTwits and Twitter. I said, I believe, right, which doesn't mean I know, I believe this is going to melt up. And boy, did it. It melted up
Mhm.
much bigger than I thought it would. And it was incredible. And so far, this is consolidating its gain quite bullishly by not pulling back. And so as we read the prices and what we spoke about earlier about it displaying others' beliefs, created with money. If traders were less confident, this would be pulling back to fill this gap. And it's not doing that. It's building a new support area. Right? This pivot, it's created a new support area. And maybe it's going to be ready, or maybe the news comes out at 2 o'clock and this is a big red bar. It's just not ready yet based on how we view things. But if this closes strong, maybe it gets even a little bigger. I think it will be ready. On Lawrence, you meant this on semiconductor? So this has been really messy, but that's a bullish gap. I guess that's on earnings, since the next earnings is in November. And you've got this monstrous red bar being negated today. Now, one of the lessons that you need to write this down. And you think it's common sense, but how many times may you have pressed the button because a candle was forming and by the end of its time period, it didn't look anything like that. And you get into trades that sometimes because you're so anxious, they call it fear of missing out, that you see a bar like this and right now it's almost 1 o'clock. And you say, I'm going to get in that because that is so bullish, that red bar going down. And so that's going to go up tomorrow. And by 4 o'clock, it's this topping tail that's closing under this bar's low. And that's when, if you're in the green room or you're emailing Dan and Greg and say, hey, what do I do it on? And we're thinking, I don't know, why are you even in it? Looks terrible. Oh, I bought it. It was up at 78.34 at that time. I thought it was going to hold on to its gain. I was like, well, you learned that lesson pretty hard, but that's another lesson. Make sure that time period that you're looking at is complete or near complete. So if you saw this and it's 3:45 in the afternoon, the probability of it looking like that 15 minutes later is pretty darn good. So you may want to say, okay, I'll take that. I'll take that overnight because of that bullish pattern. And all of this applies to intraday charts as well. And so the markets today are you can see here, the spiders and the Qs almost the whole day are in like coma-like trading as they're waiting for the Fed announcement. And the gap did not get filled. That's bullish. It built an area of support. This blue line, which you'll read in the gap course, this blue line, I'm telling you what it is today's open. And this is yesterday's close. And as an intraday trader, if you're looking at a stock like this or indice, you know that the daily is green on the day, and it's a green candle. In addition, I put moving averages in the same way that we interpret on the daily chart, the same idea of multiple time frame alignment. The 60 is equal to the 20 on the 15, the 200, the red line is roughly equal to the 20 on the 60. So this is bullish in multiple intraday time frames. And of course, you have to go to the daily to look at the daily chart to see where's resistance and support and so on and so forth. But this is waiting for news. Good. Sam is saying SMH looks good. Well, yeah, so many of these semiconductors, many of them had this big gap above this big red bar. And now it's digesting, this congestion that's right there. And look, if there was no news coming out that could, skew this thing, drive it down into this unfilled gap, I'd be saying, hey, above here, there's a void above and it should go up.
tomorrow or today's high, I guess, get through FOMC.
Right. But when that news comes out, for who knows, especially after he starts talking a half hour later, and he says something more hawkish, and everybody's anticipating a cut in September if we don't get it today, which no one's thinking, maybe some are. But if this is, diving down here in the latter part of the afternoon after he's talking, the whole thought process changes. So MTS is built on tools, concepts that force you to change your bias because this is moving, it's flowing. And so if you don't have tools that allow you to change, you're stuck in the past. I'm bothering you. I want to offer a promotion of your channel viewers, chat. No, excuse me, Mr. Sociable. Do not come in here and promote your services. We have to kick you out. All right. Okay. Let's see. We have a few more minutes here. We could look at Meta, which is doing well today. A lot of these patterns of stocks that were beaten down are building support areas. Now, this probably doesn't jump out at you as a head and shoulders kind of a bottom, but I see it that way. More of a messy one. It's not that big, and it's got gaps and stuff, but it's a bottoming pattern, but has limited upside for the moment since it's broken down. So we're objectively looking at what is, and you might say, I'm not interested in that as a swing trade, Greg, because this broke down, and sometimes these type of patterns just they disappoint versus something like Lure that we looked at, which has shown relative strength compared to Meta and compared to many things, and maybe near all-time highs. No, it's not, but it's got room before it gets to the next resistance area. So patterns like this historically have higher probabilities not to disappoint because what it communicates to us is that the majorities are interested in buying this. Here they were buying aggressively. Here they're a little apprehensive, but buying the dips. And it appears this is beginning to make a turn. And so we're definitely interested in that. Don saying Microsoft is trying to stay in the support zone. S being support zone. And you must be talking about intraday because there isn't any significant support zone here, in my opinion, Don. Here's the 5 minute, meaning, look, it created a low this morning. So this is relatively weak. And what it should have done was when it retested this area and it began to go sideways at this resistance, it should have begun to go up. And notice this tail right here. This was a green bar in resistance. It didn't close at the high. And if it had, it would continued to build on a belief that this could go up. However, look, I explained what these lines are. It's below the open and it's below yesterday's close. And the moving averages are facing down. So I'd rather look, if I wanted to day trade something, I'd rather look at something like Meta, which is above the moving averages. It's above the open, above yesterday's close, that could break out when the news comes out, where Microsoft is showing relative weakness. So does that make sense to everybody?
Yeah, big job.
Common sense. All right. Go with what's strong and stay away from the weak and consider the offers that we presented today. And we'll be back next Wednesday with another great MT Live. Bye-bye.
Good trading.
to bring you in. Slack for you. To subscribe to the channel and press the bell to get alerts. Ready again. Give us a thumbs up. Visit mastertrader.com. That's mastertrader.com.